Today, Bitcoin plummets to $54,000 to end the week. The founder of the largest tech buyout firm in the world, Thoma Bravo's founder, says he'll never touch crypto again following the disastrous bet on FTX. And Fang, the president of crypto exchange OKX, weighs in on what's driving the crypto sell-off. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Now, crypto prices sinking to end the week after this morning's jobs report showed August payrolls grew by a less than expected 142,000. Now, the unemployment rate, however, ticked down to 4.2% as anticipated. Now, while concerns of a slowing labor market pushed prices lower today, the data does clear the way for the Fed to lower rates later this month as anticipated. That move, though, could impact crypto prices further. Now, by noon Eastern, Bitcoin and Ether dropped 3.5%, with Bitcoin falling to $54,000, and Solana fell 2% to about $128. Now, for the week, crypto's in the red as of noon, with Bitcoin and Ether both down more than 8%. The two cryptocurrencies on pace for back-to-back weekly losses, with Bitcoin heading for its fifth negative week in the past 6. Okay, let's talk about the top stories for today. A key executive at the blockchain firm Ripple is among several signers of a letter endorsing Kamala Harris for president. Chris Larsen, Ripple's co-founder and executive chairman, joined 88 corporate leaders in signing the letter, which was exclusively shared with CNBC. Other high-profile signers include Yelp CEO Jeremy Stoppelman, former 21st Century Fox CEO James Murdoch, and Snap chairman Michael Linton. The group argues that Harris would continue to advance fair and predictable policies that support the rule of law, stability, and a sound business environment if she were president. The purpose of the short letter with the long list of signers is to serve as a well-timed political show of support for Harris, who is locked in a very tight race against Republican presidential candidate Donald Trump. A reminder that the first presidential debate between the two is just days away. Meantime, Trump, who has recently taken on a pro-crypto stance, has been getting the support from big crypto names, including the Winklevoss twins, after his campaign announced in May that it would accept crypto donations. Next, Orlando Bravo, who runs the largest tech buyout firm in the world, says he's no longer investing in the crypto industry. Now, the founder and managing partner of Thoma Bravo made the revelation on CNBC's Squawk on the Street yesterday, saying he and his company are permanently out of crypto after the collapse of FTX. A little more than 3 years ago, Bravo called FTX the most cutting-edge, sophisticated cryptocurrency exchange in the world, as Thoma Bravo helped lead a $900 million investment in the company at a valuation of $18 billion. But in late 2022, of course, FTX spiraled into bankruptcy, and the crypto exchange's founder, Sam Bankman-Fried, is now in the early days of serving a 25-year prison sentence for the massive fraud and conspiracy that led to the company's collapse.
Once you make a mistake, and once you get burned on something, our philosophy and my philosophy is you never touch it again. Even if it turns out that you missed a big boom. Personally, I'm a believer in blockchain. I think it's a powerful way of doing many things and for many use cases. And I've always believed that. From an investment standpoint, after you make a mistake, we kind of move on.
Thoma Bravo has emerged as a giant in the tech industry because of several multi-billion-dollar software buyouts in recent years. The firm, which was founded in 2008, now oversees about $160 billion in assets. Last, PitchBook just dropped a new report on crypto VC funds, revealing that even though the past 2 years have been tumultuous for crypto fundraising, signs of a recovery are starting to emerge. Now, the report notes that the median fund size has increased this year, up more than 65% to $41.3 million. According to PitchBook, the rise of mid-sized crypto VC funds, which are worth $100 million to $500 million, reflects a strategic adaptation to market challenges. The report notes that the crypto VC landscape has experienced significant fundraising fluctuations, with 2022 reaching an all-time high of $23.7 billion raised, almost doubling 2021's total. But then in 2023 saw a sharp decline, with fundraising dropping by nearly 90%. PitchBook notes that the time between fundraises and the duration to close funds have both been lengthened from 2021 to 2024, which reflects increased caution amongst investors. The financial data provider warns that the crypto fundraising environment will stay tough as the market recovers, adding that without significant returns to limited partners, experienced crypto investors will likely stay cautious, while newer LPs might be attracted to trending narratives like the integration of crypto and AI. All right, back to markets for our main story. Crypto World's Jordan Smith spoke with Hong Fang, president of the crypto exchange OKX, about what's driving crypto prices as fresh economic data rolled in this morning and whether institutions are staying on the sidelines.
Let's start with markets this week. We got another week of losses for Bitcoin and Ether. Both are down when I last checked between 7 and 9% since last Friday. JP Morgan put out a report saying that the crypto market is lacking near-term catalysts that will really drive prices higher. What's your reaction to that and the price moves that we've seen in the past few days and weeks? What's it going to take to break this sideways and downward trend of crypto?
Yeah, I do think that if you look at near-term dynamics, there is a lot of flow that are being influenced by macro news. There was new information around the weaker labor market. I think there are a lot of expectation or speculation around a rate cut because of the weaker economy and weaker labor markets that people are seeing. So I think that does affect crypto prices as well. As we all know that there is a lot more institutional participation, ETF participation in the broader crypto space, particularly for Bitcoin and Ethereum. I think that is affecting the near-term price. It is definitely a risk-on asset for a lot of the new customers, investors. But I also think that the fundamental value proposition for Bitcoin is unchanged. I think if you look at the new user inflow on exchanges from institutional side, from the retail side, that trend continues. We continue to see new customers coming in, onboarding with us, both on retail side and on institutional side. We recently did a research paper on institutional landscape and interest, and there is a strong interest. 70% of the institutional investors are actually showing interest and say that they want to actually allocate toward Bitcoin within the next 2 or 3 years. So I think there's a lot of long-term confidence in this. I think we just need a little bit more catalyst near term, and also honestly, I think it's ongoing education for people to understand what this is about. So yeah, that's my point of view.
Yeah. I want to go back to something you said about institutional adoption and pair it with this conversation around ETFs. You made the point that you're talking to people who are looking at it at a 1 year, 2 year, 5 year horizon. And when I look at ETFs, a lot of people were really anticipating, $100 billion, $150 billion of assets under management by the end of the year. And so far, we just haven't seen that sort of momentum there. Where do you think Wall Street and institutions are in their thinking? Is it just, we're on the sidelines until we get away from some of this macroeconomic uncertainty, and then we'll really take another look at crypto? Or is it more of, to your point, an educational gap? Because, we've talked about educational gaps in crypto for a while, but it's been around for 15 years now. So how much of an educational gap is there? What is the thinking for institutions?
I think from an institutional perspective, what we see is that this year, over the last 12 months, there's a pretty big change in mindset and level of acceptance from institutional customers, both because of regulatory evolution as well as ETF approval. So yes, the ETF inflow and outflow, the net flow may fluctuate. Initially it started very strong, and then we started to see outflow. I think over the last few days, it's actually net outflow as well. But it doesn't mean that institutions are not adding their position. I think we always see news where some institutions coming out and say we are actually accumulating Bitcoin to people's surprise. So generally speaking, I think institutional investors are more sophisticated investors. They, even if when they have a long position, they do not just go ahead and buy, right? They actually made a calculated move, and they talk about it after making the move. So I do think that what we are seeing from our conversation with customers, from the actual activity, the institutional interest is still there. It's more short-term trading.
Let's talk about a little bit more about the economy and sort of where Bitcoin and other cryptocurrencies fit into an investment strategy. There have been a lot of claims made about where Bitcoin or other crypto fits in a strategy as a hedge against inflation or a way to avoid economic uncertainty like we're seeing right now. It seems like not one of those narratives have borne out exactly. It's been a number of different examples in where crypto can fit. But where do you think crypto fits in this environment right now without saying specific strategy?
I think for any investors who care about long-term value, it is very hard not to think about Bitcoin unless you don't really know about it, or do not actually want to spend time understanding it. If you actually spend time to research and learn about it, I think it's very hard to not have an allocation toward Bitcoin, because it does provide that long-term inflation hedge. It also provides a geopolitical hedge to some extent, depending on which jurisdiction you are at this point. So and it's borderless as well, right? People actually talk about having Bitcoin or Ethereum as an alternative for people. For example, in countries where there's more capital control, they cannot get capital out of those countries. Traditionally, they use, wallet, watch, or, cruise ship to move wealth out of a country. But now they have Bitcoin. So I do think that demand is there. I think the institutional education has some of it has been done by the ETF approval, but that I think will continue. You also see big corporate starting to allocate Bitcoin, allocate into Bitcoin from their treasury fund as well. Not just crypto exchanges, but normal corporations. So I think that trend is kind of ongoing. Retail, the same thing. But probably from a retail education perspective, really depends on how much pain people feel in their everyday life. And I think that pain index is probably a direct nudge to in the education front from a retail perspective.
Let's shift to OKX. Your company obviously weathered the worst of the crypto winter. We've moved back to some sort of bullishness for the space, regardless of what prices are doing right now. How is OKX doing in this environment, and how are you feeling about adoption in the industry, as you talked a little bit about earlier?
Yeah, for us, we really look at it from a long-term perspective. To be honest, even in the normal concept of bear market, I don't think what we have been doing have been much different from what we have been doing in a bull market, which is really focused on building product, building infrastructure, building the global infrastructure from product perspective, legal and compliance perspective, people perspective, so that we can actually properly offer the right set of product to different people in different jurisdiction in that local scenario. So, which actually takes an immense amount of time and resources. It takes a long time. It took us a few years to settle down in Europe. It took us a few years to settle down in Singapore, for example. So every market, to properly invest and serve that market in a sustainable way, I think it takes years of investment. So from that perspective, it doesn't really matter to us whether we are in a bull market or in a bear market. And we are, we recently had some good news, but that's not really because of what we do this year. It actually, it's a years of investment, and ultimately came to this point.
Okay, that's all for Crypto World this week. We'll be back again on Monday. We'll see you then.